Welcome to GRE. I'm your host, Keith Weinhold. Real estate and other investing involves people. From the disappointing to the mesmerizing, people have contributed countless quotes, maxims, and aphorisms on investing. Today, I'll recite and then we'll discuss dozens of influential ones and what you can learn from this timeless wisdom today on Get Rich Education.
Since 2014, the powerful Get Rich Education podcast has created more passive income for people than nearly any other show in the world. This show teaches you how to earn strong returns from passive real estate investing in the best markets without losing your time being a flipper or landlord. Show host Keith Weinhold writes for both Forbes and Rich Dad Advisors and delivers a new show every week. Since 2014, there's been millions of listener downloads in 188 world nations. He has A-list show guests include top-selling personal finance author Robert Kiyosaki. Get Rich Education can be heard on every podcast platform, plus it has its own dedicated Apple and Android listener phone apps. Build wealth on the go with the Get Rich Education podcast. Sign up now for the Get Rich Education podcast or visit GetRichEducation.com.
You're listening to the show that has created more financial freedom than nearly any show in the world. This is Get Rich Education.
Welcome to GRE. From Ellis Island, New York to Ellensburg, Washington, and across 188 nations worldwide, I'm Keith Weinhold, and you're listening to Get Rich Education for the 508th consecutive week. Happy July! It's the first day of the quarter, and it's now the second half of the year. So late last year, when you got takeaways from our goals episode here, I hope that you're still applying them today. We're doing something different on this show. For most episodes, I divulge a lot of my best guidance. Some even quote that material. But why don't I acknowledge others' great quotes, maxims, and aphorisms, along with some of my own. And then I'll tell you what you can learn from them. So yes, today it's about axioms, adages, mantras, and quotes, maxims, and aphorisms. Some of these you've heard, others you probably haven't. The first one is, the only place you get money is from other people. Yeah, isn't that so solidly true? You've never received any money in your life from yourself, unless you try to counterfeit it and give it to yourself. It's always been from other people. When you realize that the only place that you do get money is from others, you realize the value of relationships and connectivity. The next one comes from the brilliant entrepreneurial coach Dan Sullivan. You are 100% disciplined to your set of habits. Gosh, this is a terrific reminder about the importance of how you have to often uncomfortably apply something new in order to up your skill set, up your game. If you keep getting distracted, well, then that's a habit, and then you'll soon become disciplined to the habit of distraction. The next two go together, and they're about market investing. Nobody is more bearish than a sold-out bull. And the other is, bears make headlines, bulls make money. Really, the lesson there is that they're both reminders that it's better to stay invested rather than on the sidelines. The next two are related to each other as well. Albert Einstein said, strive not to be a person of success, but rather to be a person of value. And then similarly, a more modern day spin on that, Tony Hsieh, the late CEO of Zappos, he said, chase the vision, not the money, and the money will end up following you. And the lesson here is, well, we'd all like more money, but if you focus on the money first, well, then it doesn't want to follow you. You need to provide value and build the vision first, and then the money will follow. And to me, it's kind of like getting the girl. If you act too interested in her and you get too aggressive, it's a turnoff. But if you quietly demonstrate that you're a person of value, or subtly suggest somehow in a way that their life could be improved by having a relationship with you or being around you, then they're more likely to follow. And yes, I'm fully aware that this is a heterosexual male analogy, and I use it because that is what I am. So if you're something else, I'm sure you can follow along with that. The next quote is from Suze. Doubt kills more dreams than failure ever will. Gosh, isn't this so on point? It's about overcoming the fear and just trying. And then if you know that you've lived a life of trying, you're going to have fewer regrets. Thomas Edison, yes, the light bulb guy and the co-founder of General Electric, he said, "The value of an idea lies in the using of it." Oh yeah, that's a great reminder that knowledge isn't really power. It's knowledge plus action that creates power, because an idea that remains idle doesn't do anyone any good. Hey, we're just getting started talking about investing in real estate quotes today here on episode 508 of Get Rich Education. And remarkably, these maxims and catchphrases, they're usually just one or two sentences, but yet they are so often packed with the wisdom such that these takeaways and lessons are like your three favorite ones today. They can change the trajectory of your entire life. The next quote is one that I have said: carefully bought real estate has the best risk-adjusted return in the world. And I don't need to explain that because we talk about that in some form or another on the show many weeks. Albert Schweitzer said, "Success is not the key to happiness. Happiness is the key to success. If you love what you're doing, you will be successful." Yeah, I'd say that one is mostly true, just mostly. Though there's no attribution here on this next one, you might have heard the aphorism, "Money is a terrible master, but an excellent servant." Yeah, now I've heard that one for a long time, and it took me a while to figure out what it really meant. And here's my take on that. If you make money the master, well, then you'll do almost anything. You'll trade your time for money. You'll sell your time for dollars. Instead, if you invest passively and it creates leveraged equity and income streams, then money serves you. It's no longer the master. That's what that means to me here in a real estate investor context. And it really underscores the importance of making money work for you. And as a follow-up to last week's show, whose money are we talking about here? Whose is it? It's focusing on getting other people's money to work for you, not just your own. Now, the next one is a quote that I've said on the show before, quite a while ago, though. And come on now, what would an episode about quotes, maxims, and aphorisms be without some contribution from Mark Twain here? Twain said, "Why not go out on a limb? That's where the fruit is." That's just so good. In business and in so many facets of your life, constantly playing it safe is the riskiest thing that you can actually do, because a risk-averse investor places a ceiling on his or her potential, and a risk-averse person imposes an upper limit on their very legacy. In fact, episode 275 of the Get Rich Education podcast is named "Go Out on a Limb" precisely because of this Twain quote. So listen to that episode if you want to hear a whole lot more about that. It's actually one of Twain's lesser-known quotes, but perhaps his best one. The next one comes from famous value investor Benjamin Graham. He said, "The individual investor should act consistently as an investor and not as a speculator." Okay, so what's the difference there? A speculator takes big risks in hopes of making large, quick gains. Conversely, an investor focuses on risk-appropriate strategies to pursue longer-term goals, which is really consistent with being a prudent, disciplined real estate investor. Presidential advisor Bernard Baruch contributed this to the investing world: "Don't try to buy at the bottom and sell at the top. It can't be done except by liars." Yes, trying to time the market, it might be tempting, but it rarely works because no one really knows when the market has reached its top or its bottom. All you can really hope to do is buy lower and sell higher, but you're never going to buy at the trough and sell at the peak. And even buying lower and selling higher is harder to do than it sounds, even though everyone knows that's what they're supposed to do. Albert Einstein's back here. He said, compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it. And as you've learned here on the show on previous episodes, compound interest, it does work arithmetically, but not in real life when applied to the stock market. Of course, my quote contribution to the investing world on this is compound interest is weak. Compound leverage is powerful. I broke that down just last week on the show, so I won't explain that again. Now, really a central mantra in GRE principle is don't live below your means, grow your means. But I must tell you, I can't really take credit for coining that particular one, because from the rich dad world, the quote is, don't live below your means, expand your means. But I did hear that from them first, and though I can't be certain, I think it was Sharon Lechter that coined that one. A lot of people don't know this, but she was the original co-author of the book Rich Dad, Poor Dad with Robert Kiyosaki, and Sharon has been here on the show before. And if I have her back, I will ask her if she is the one that coined that. Don't live below your means, expand your means. But yeah, I mean, what this quote really means is, in this one finite life that you have here on Earth, why in the world would you not only choose to live below your means, but actually take time and effort learning how to do a better job of living below your means when it just makes you miserable after a while, when instead you could use those same efforts to grow your means? And you can only cut down so far, and there's an unlimited ceiling on the upside. And now there is one caveat here. I understand that if you're just getting on your feet, well then living below your means might be a necessity for you in the short term. And what's an example of living below your means? It's eating junk food because it's cheap and filling. Expanding your means, that might be doing something like learning how to do a cost segregation to accelerate your depreciation write-off on your 20-unit apartment building. But you know, even if you're in hardship, I still like live within your means more than the scarcity-minded guidance of live below your means. Next is a terrific one, and it really reinforces the last quote. A rich man digs for gold. A poor man is concerned with the cost of a shovel. Oh yeah, that's so good. And I don't know who to attribute that to. It's about growing your means and taking on and actually embracing calculated risk. Not every risk, calculated risk. And you can also live that regret-free life this way. In fact, episode 91 of this show is called A Rich Man Digs for Gold. So you can get more inspiration for that from that episode. Okay, this one comes from the commodities world where there are notoriously volatile prices. How do you make $1 million? You start with $2 million. Now, this next one is one that I don't really agree with that much. You've really heard this a lot the last few years. It applies when you have a mortgage on a property, and that is the house is the liability and the debt is the asset. I know people are trying to be crafty. People kind of use this pithy quote when they're discussing how those that locked in at those artificially low mortgage rates years ago consider the debt so good that it's an asset. It's like, yeah, I know what you're saying, and I love good real estate debt and leverage and all that, of course, but really, for you, truly then, if the house is a liability and the debt is an asset like you're saying, then give away the house to someone else if it's such a liability, and keep the debt to pay off yourself if it's really such an asset. A little humorous here next. Forbes magazine said, how do you make $1 million? Marry a millionaire, or better yet, divorce one. Then, more real estate-ish is Jack Miller's quote, how do you become a millionaire? Well, you borrow $1 million and you pay it off. Yeah, and I think we can all relate to that here at GRE. Better yet, borrow $1 million and don't pay it off yourself. Have tenants and inflation pay it down for you. And you know, inflation is getting to be a problem for any of these like century-old classic quotes that have the word millionaire in them, because having a net worth of $1 million, that actually used to mean you were wealthy, and now it just means you're not poor, but you might even be below middle class. Now, you probably heard of some of these next ones, but let's talk about what they mean. Warren Buffett said, "The stock market is a device for transferring money from the impatient to the patient." And then Benjamin Franklin said, "An investment in knowledge pays the best interest." I mean, yeah, that's pretty on-point stuff there. When it comes to investing, nothing will pay off more than educating yourself. So do some research before you jump in. And you've almost certainly heard this next one from Warren Buffett.
You want to be greedy when others are fearful, and you want to be fearful when others are greedy.
That is, be prepared to invest in a down market and to get out in a soaring market, as per the philosophy of Warren Buffett. It's far too easy for investors to lose perspective. When something big goes wrong, a lot of people panic and sell their investments. And looking at history, the markets recovered from the 2008 financial crisis. They recovered from the dot-com crash. They even recovered from the Great Depression, although it took a long time. So they're probably going to get through whatever comes next as well. If you really follow that through, what Buffett said there, well, then at a time like this, now, I mean, you could be looking at shedding stocks as they continue to approach and break all-time highs. Carlos Slim Halou said, "With a good perspective on history, we can have a better understanding of the past and present, and thus a clear vision of the future." Okay, that quote, that probably didn't sound very snappy, and it's really simple, but he's telling us that if you want to know the future, check on the past. Not always, but often, it will tell you the future trajectory, or at least that trajectory's range. And this is similar to how I often say, take history over hunches, like when you're applying economics to real estate investing. Now, this next guy's been a controversial figure, but George Soros said, "It's not whether you're right or wrong that's important, but how much money you make when you're right and how much you lose when you're wrong." Okay, I think that quote means that too many investors become almost obsessed with being right, even when the gains are small. Winning big and cutting your losses when you're wrong, they are more important than being right. Amazon founder Jeff Bezos said, "Given a 10% chance of a 100 times payoff, you should take that bet every time." All right, now that's rather applicable to the high-flying risk of, say, investing in startup companies. Well, see, Bezos himself, he took a lot of those bets, a 10% chance at a 100x payoff, and that is exactly why he's one of the richest people in the world. Now, if you haven't heard of John Bogle before, you should know who he is. He co-founded the Vanguard Group, and he's credited with popularizing the very concept of the index fund. I mean, Bogle transformed the entire investment management industry. John Bogle said, "Don't look for the needle in the haystack, just buy the haystack." Okay, if it seems too hard to say find the next Amazon, well, John Bogle came up with the only sure way to get in on the action. By buying an index fund, investors can put a little bit of money into every stock, and that way they never miss out on the stock market's biggest winners, though they're only going to have a small part. And what that means to a real estate investor is, say, rather than buying a single property in a really shabby neighborhood, that neighborhood will drag down your one property. So to apply Bogle's buy the whole haystack quote, what you would do then is raise money to buy the entire block or even the entire neighborhood and fix it up, therefore raising the values of all of the properties. Back to Warren Buffett, he had this analogy about the high jump event from track and field. He said, "I don't look to jump over 7-foot bars. I look around for 1-foot bars that I can step over." Yeah, all right. I mean, investors often do make things too hard on themselves. The value stocks that Buffett prefers, they frequently outperform the market, making success easier. Supposedly sophisticated strategies like short selling, a lot of times they lose money in the long run, so profiting from those is more difficult. Now, you might have heard the quote, and it's from Philip Fisher. He said, "The stock market is filled with individuals who know the price of everything, but the value of nothing. Yeah, I mean, that's really another testament to the fact that investing without an education and research, that's ultimately going to lead to pretty regrettable investment decisions. Research is a lot more than just listening to the popular opinion out there, because people often just then invest on hype or momentum without understanding things like a company's fundamentals or what value they create for society, or being attentive to price to earnings ratios even. Robert Arnott said, in investing, what is comfortable is rarely profitable. Yeah, that's pretty on point. At times, you have to step out of your comfort zone to realize any big gains. Know the boundaries of your comfort zone. Practice stepping out of it in small doses. As much as you need to know the market, you need to know yourself too. Can you handle staying in when everyone else is jumping out? Or do you have the guts to get out during the biggest rally of the century? You've got to have the stomach to be contrarian and see it through. Robert G. Allen said, how many millionaires do you know who have become wealthy by investing in savings accounts? I rest my case. That's the end of what Robert G. Allen said. Yeah, though inflation could cut out the millionaires part, point well taken. No one builds wealth through a savings account. Now, a savings account might be the right place for your emergency fund. It has a role, but it's not a wealth builder. I mean, since we left the gold standard back in 1971, so many dollars get printed most years that savers become losers, which, hey, that does bring us to Robert Kiyosaki. He's been a guest on the show here with us 4 times now, one of our most frequent guests ever here. He's the Rich Dad Poor Dad author, and you probably know what I'm going to say. Kiyosaki said, savers are losers, debtors are winners. Something that your parents probably would never want to know that you subscribe to, your grandparents especially. Yes, Kiyosaki, he is one of the kings of iconoclastic finance quotes. And as you know, I've got some contributions to that realm myself, but what Kiyosaki is saying is if you save $100K under a mattress and inflation is 5%, well, now after a year, you've only got $95K in purchasing power. So therefore, get out of dollars and get them invested. Even better then, if you can get debt tied to a cash flowing leveraged asset. In fact, episode 212 of this very show is named Savers Are Losers, Debtors Are Winners. So I go deep on that theme there. We've got more as we look at and break down some of the great real estate investing quotes, maxims, and aphorisms. They generally get more real estate-ish as we go here, including ones that you haven't heard before, and dropping quote bombs here that absolutely have to be enunciated and brought to light ahead on GRE's Real Estate Quotes episode. Hey, learn more about what we do here at GetRichEducation.com, GetRichEducation.com. And do you have friends or family that are into investing or real estate? I love it when you hit the share button on your podcatching device or whatever platform you're listening on. Everything that we do here is free, and the share button really helps the show. Be sure to follow or subscribe yourself if you haven't done that. More straight ahead, I'm Keith Weinhold. You're listening to Get Rich Education. Your bank is getting rich off of you. The national average bank account pays less than 1% on your savings. If your money isn't making 4%, you're losing your hard-earned cash to inflation. Let the liquidity fund help you put your money to work with minimum risk. Your cash generates up to an 8% return with compound interest year in and year out instead of earning less than 1% sitting in your bank account. The minimum investment is just $25K. You keep getting paid until you decide you want your money back. Their decade-plus track record proves they've always paid their investors 100% in full and on time. And I would know because I'm an investor too. Earn 8%, hundreds of others are. Text FAMILY to 66866. Learn more about Freedom Family Investments Liquidity Fund on your journey to financial freedom through passive income. Text FAMILY to 66866. For a lender that's a specific expert with income property, you need Ridge Lending Group and MLS 42056. In GRE history, from beginners to veterans, they provided our listeners with more mortgages than anyone. It's where I get my own loans for single-family rentals up to 4plexes. Start your pre-qualification and chat with President Chaley Ridge personally. They'll even customize a plan tailored to you for growing your portfolio. Start at ridgelendinggroup.com, ridgelendinggroup.com.
This is Rich Dad Advisor Ken McElroy. Listen to Get Rich Education with Keith Weinhold and don't quit your daydream.
Welcome back to Get Rich Education. I'm your host, Keith Weinhold, as we're having some fun today, looking at and breaking down some of the great investing quotes, maxims, and aphorisms. Andrew Carnegie said, "The wise young man or wage earner of today invests his money in real estate." Another one from Mark Twain here, "Buy land, they're not making it anymore." You probably heard one or both of those. And yeah, Twain's time predated that of those islands that are built in Dubai, but Twain's point is still well taken. There is an inherent scarcity in land. Louis Glickman drove the point home about real estate investing when he simply said, "The best investment on earth is earth." A Hebrew proverb goes as far as saying, "He is not a full man who does not own a piece of land." Wow, that's pretty profound right there. And if you're a female listener, yes, many of these timeless quotes from yesteryear harken back to a period when all of the landowners were men. President Franklin D. Roosevelt, he has a real estate quote that you probably heard, but let's see what I think about it. Let's talk about it. Here it is. "Real estate cannot be lost or stolen, nor can it be carried away. Purchased with common sense, paid for in full, and managed with reasonable care, it is about the safest investment in the world." That's from FDR. That's pretty good. I just don't know about the paid in full part because you've lost your leverage, FDR. Johnny Isaacson, a U.S. Senator, said, "In the real estate business, you learn more about people and you learn more about community issues. You learn more about life. You learn more about the impact of government, probably more than any other profession that I know of." And that's good. Really on-point stuff there. If you're a direct real estate investor like we are here, you really learn those things. If you're in, say, a REIT, well, you're not going to be exposed to that type of knowledge and experiences. Hazrat Inayat Khan is a spiritualist, and he said, "Some people look for a beautiful place, others make a place beautiful." Yeah, that's some mystical motivation for the house flipper or the value-add real estate syndicator right there. Political economist John Stuart Mill, he said something you've probably heard before. "Landlords grow rich in their sleep without working, risking, or economizing." Oh yes, you can't have a real estate quotes episode without that classic one. Although rather than landlords growing rich in their sleep, the phrase real estate investors is likely more accurate. Don't wait to buy real estate, buy real estate and wait. You've surely heard that one. You might not know that it was actor Will Rogers with that particular attribution. Entrepreneur Marshall Fields said, "Buying real estate is not only the best way, the quickest way, the safest way, but the only way to become wealthy." Billionaire John Paulson said, "I think buying a home is the best investment any individual can make." That's what Paulson said. Let's give Paulson the benefit of the doubt here. Although Robert Kiyosaki famously said that a house is not an asset because an asset puts money in your pocket and your home takes money out of your pocket, well, a home is something that you get to live in, build family memories in, and you do get some leverage if you keep debt on your own home. So maybe that's more of what's behind John Paulson's maxim there. Notable entrepreneur Jesse Jones, he said, "I have always liked real estate, farmland, pastureland, timberland, and city property. I have had experience with all of them. I guess I just naturally like the good earth which is the foundation of all our wealth. Business mogul Tamir Saper said, if you're not going to put your money in real estate, where else? Yeah, I guess that's a good question. Anthony Hitt, real estate professional, he said, to be successful in real estate, you must always and consistently put your client's best interests first. When you do, your personal needs will be realized beyond your greatest expectations. Yeah, I think he's talking about being a team player there. And if you're a real estate agent, it's about putting your client's needs over yours. If it's a landlord, perhaps then you're thinking about putting your tenants first and meeting their needs so that they stay in your property longer. Here's a quote that I've got to say I don't understand. It's from real estate mogul and Shark Tank shark, Barbara Corcoran. She says, a funny thing happens in real estate. When it comes back like gangbusters. I don't really know what that means, and I don't know what a gangbuster is. Yet I see that quote all over the place. I can't explain why that would be popular. I don't get it at all. Novelist Anthony Trollope said, it is a comfortable feeling to know that you stand on your own ground. Land is about the only thing that can't fly away. Entrepreneur Armstrong Williams is here with this gem. Now, one thing I tell everyone is to learn about real estate. Repeat after me. Real estate provides the highest returns, the greatest values, and the least risk. Yeah, that's a real motivator of a quote. As long as one knows what they're doing and buys right, all of that could very well be true from Armstrong Williams. It was none other than John D. Rockefeller that said, the major fortunes in America have been made in land. Yeah, it's just really plain and simple there. John Jacob Astor, he got specific and more strategic here. This is Astor. He said, buy on the fringe and wait. Buy land near a growing city. Buy real estate when other people want to sell, and hold what you buy. That's pretty much an all-timer right there from Astor. Winston Churchill said, land monopoly is not only monopoly, it is by far the greatest of monopolies. It is a perpetual monopoly, and it is the mother of all other forms of monopoly. Yeah, interesting from Churchill, and there's a good chance that you haven't heard that one before. Perhaps, say for example, if one owns real estate on all four corners of a busy street intersection, then that quote applies. It's like you've got a monopoly on a popular intersection. Russell Sage said this, real estate is an imperishable asset, ever increasing in value. It is the most solid security that human ingenuity has devised. It is the basis of all security and about the only indestructible security. That's from Russell Sage. And, you know something here? As we've got lots of real estate specific quotes in this segment, is that it is rare to non-existent to see any negative quotes about real estate, about anyone saying anything bad about it. It's all positive stuff, waxing eloquent about real estate. And there are a lot of reasons to do that, but not every real estate moment is great. Maybe this is all because nothing quotable is said when you find out that one of your tenants is a drug dealer. Finance expert Suze Orman says this, owning a home is a keystone of wealth, both financial affluence and emotional security. Yeah, a lot like an earlier quote, a home is the only investment that you get the benefit of living in. Peter Lynch said, know what you own and why you own it. That is short, sweet, and it's just a really good reminder to you. Do you now own any properties that you would not buy again? And if you wouldn't buy it again, then should you consider selling it? Now, not FDR, but Theodore Roosevelt, he said, every person who invests in well-selected real estate in a growing section of a prosperous community adopts the surest and safest method of becoming independent, for real estate is the basis of wealth. That's Theodore Roosevelt. Yeah, he reiterates that you want to own most of your property in growing places, something that really hasn't changed over all this time. Koki Odyssey contributes this. The house you looked at today and wanted to think about until tomorrow may be the same house someone looked at yesterday and will buy today. Oh, gosh, that's true. I think that everyone has the story of the one that got away. Margaret Mitchell said, the land is the only thing worth working for, worth fighting for, worth dying for, because it's the only thing that lasts. Yeah, wow, some real passion there from Margaret. Sir John Templeton said, the 4 most dangerous words in investing are, it's different this time. Yeah, I think what Templeton is advising is to follow market trends in history. Don't speculate that this particular time will be any different. Warren Buffett said, wide diversification is only required when investors do not understand what they are doing. Yeah, that insight from Buffett, that's pretty applicable when you understand that you've got to get good in a niche and then get rich in that niche, meaning being narrow. Wide diversification, that's likely better when you're just beginning and you don't know much, but then you want to get niche-y in your big earning years, and then perhaps when you're older, you get diversified once again because you're more interested in just protecting what you have. Robert Kiyosaki said, it's not how much money you make, but how much money you keep, how hard it works for you, and how many generations you keep it for. Now, there's something with tax efficiencies and more in that Kiyosaki quote. My friend Dave Zook, billionaire dollar syndicator and frequent guest on this show, he said, you can be conventional or you can be wealthy. Pick one. Oh, yeah, love that from Dave. Because if you do what everyone else does, you'll only get what everyone else got. And I've contributed some material here over 508 episodes of this show, although I won't claim the eminence of some of the other luminaries of the past few centuries discussed today. I've been known to say these. You do care about what others think. That's your reputation. I've been known to say, the scarcity mentality is abundant and the abundance mentality is scarce. And some say that in real estate, I was the first one to point out back in 2015 that real estate pays 5 ways. Another that I have is a critique of delayed gratification. Now, some delayed gratification is okay early on in your life, but I've said too much delayed gratification becomes denied gratification. Here on Earth, you live just one life. Hey, and the other day, an entrepreneurial friend, I don't know, he seemed to think that I have the right life balance. I'm not sure if that's true or not, but here's what I told him. And I think he said this because he often sees me out exercising and things. I told him, I give my best to exercise. Business only gets leftover time. That's because exercise is hard and making money is easy. Yeah, there it is. That's my take on that. And that's it for today. I hope that you got some learning, some perspective, a few laughs, and that some thought was spurred inside your mind in order to give you at least one big, rich, novel takeaway here. And it's probably best for you to refer back to this episode of Quotes, Maxims, and Aphorisms at times when you're feeling shaky about your investment decision-making or just other times of uncertainty. Until next week, I'm your host, Keith Weinhold, and there's something else that I've been known to say: don't quit your daydream.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
The preceding program was brought to you by your home for wealth building, GetRichEducation.com.
Weinhold.com.